Well, it's very interesting, the action of the stock. Last night it was up first in overtime, and then it was down 5%, and now it's outperforming the market nicely. So I think the digestion has been that they had an incredible quarter. You know, you just can't take that away from them. Much better than expected on many measures, particularly iPhones, which are the most important part of the business. But we know 80% of those are assembled in China, and 20% of the sales are in China, and Tim Cook talked about that. The way I would look at Apple is the following. It's still a strong, safe, and extremely, I'd say, predictable company in a certain way. So it provides that level of reassurance and stability to portfolios. There aren't that many people who are overweight Apple because it's too big a percent of the S&P, and there aren't that many people who don't have Apple. And so they keep it in their portfolios because it's such a great company. Whether it's too expensive a stock, remember it outperformed dramatically last year and has been a very strong performer through the pandemic and since we've reopened. Whether it's slightly too expensive is really the question. And that's what, professional investors debate. Do you want to pay, a multiple and a half, 1.5 or two times what the market is selling for? Well, maybe you don't. But what do you do with the money otherwise? And that, to me, is still a debate on Apple. Is this quality so high that you want to retain it in your portfolio and not worry about what 4 months from now or 5 months from now will be a problem that they have resolved?
Josh, we made the point of, and you did going into the number, that 150 was a critical level for Apple, 150, 155. The stock has recovered quite nicely from looking like it might be in the danger zone. Do you have a good feel on where you think Apple goes from here as it sits at 160? So it's $10 above that critical level, and it's still 20 some odd bucks, 25, 30 bucks away from its high.
Yeah, and importantly, Microsoft had a false breakdown below 275 and recovered really fast. And these were the two things that I felt had to hang in there in order to save this market. And so far, that's what's playing out. But we are really not getting a lot of follow through here. The new lows list is expanding. I guess the most bullish thing I could tell you is that the AAII survey this week is at a level. The spread between bulls and bears is at a level more bearish than anything we've seen outside of the great financial crisis. Literally, this is it. We ain't never seen, I'm on the show 11 years with you, Judge. We ain't never seen an environment this negative. And the people who answer that survey question, AAII, are people who own Apple and Microsoft. They own the Qs. These are 60-40 portfolio investors. It makes sense that they're this bearish. They have an 11% haircut to start the year in a diversified portfolio, and that's if they're just in the indexes and not in individual stocks. But that's like the most positive thing I could say right now is that we're already at washout levels of sentiment. But technically, the internals, none of that stuff looks good yet. None of it. So I'm glad Apple and Microsoft hung in there and are above those key breakdown levels. I can't promise you they'll be above those levels on Monday.